See, a robot is blind, a robot has one arm, and a robot is an idiot. If you try to have a car being built by a blind one-armed idiot and 100 of them, you're going to get nowhere. This was solved in the 70s. You got to use people.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to the Morning Zoo Radio Money Path Podcast. This episode 116. Your hosts, brilliant mind Bob Iacchino and technical scientist Mike Arnold. Today's What in the Why is sponsored by Motive Wave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join the show and have a conversation of news in the markets.
Are we testing?
I'm going to read mean comments real quick. Mean comments from the last show.
How can we get mean comments?
I'm doing a fake laugh as a sidekick right now. All right, so starting off with mean comments.
Mean comments. This is a sad, cliched show. It's not funny. Wannabes copying every lame radio show I've ever heard. Sidekicks snickering like hyenas at everything. Turned you lamos off after the first 30 seconds and made a mental note to not come back to the Money Path Podcast ever again. A painful listen. So if he turned off after the first 30 seconds...
You know, I actually want to know his skill set because you know how many things I've started streaming and got like 4 or 5 episodes in and then I realize it's crap? If I could watch the first 30 seconds of anything and know it's crap... I'm good. You know how much time I'll save in life?
Hey, the first 30 seconds of the first show of The Sopranos was crap. I'm just saying. Usually the first 30 seconds being crap, and that is what we go for, indicates a really good long-term show. So we're going for crap in this first 30 seconds.
Did I tell a joke in the first 30 seconds? Is that
Probably.
what happened?
Tesla's lawyers are ex-divorce attorneys. That's what it was.
Oh, yeah. Stafford, he sent me that comment, and I said, maybe he's just a Tesla fan.
Clearly a Tesla fanboy.
He doesn't like my picking on Tesla.
I think that's a compliment. Every lame radio show, that we've hit that bar. That's success in our book.
It's exactly what you want. Eddie and Jobo are my idols growing up.
I'm a Kevin Matthews, Steve Dahl guy, but...
Yeah, I was too, actually. I was being lame and funny, not funny.
So you were being me.
Exactly.
Oh, wait, I'm not supposed to laugh or snicker. Hold on.
We can get a laugh track, and it'll be just like the lame-o sitcoms will be the next comment.
Oh, we don't have that many. But when things are generally funny, I like to laugh.
Yeah, I know. Usually when you get a comment like that, if I don't like something, I just don't listen to it anymore. I don't take the time to write a bad review about it.
Yeah, Path Trading responded to the commenter saying thank you for the comment, and we'll be adding your comment to the next show.
Yeah, there you go.
Best wishes, happy trading.
So I actually think he spent more than 30 seconds writing his comment. So he wasted more time writing a comment than he did listening to the show. Oh, speaking of funny, IBM so far wins the earnings announcement of the quarter. So I know it's early in the quarter, but IBM wins.
Tell us why IBM wins, Mike.
Well, at first glance, they beat their earnings and they have their non-GAAP earnings per share $2.45, up 4% year over year, and beating expectations of 242. Now this is non-GAAP. Remember, this is the which I don't even. Can we just make a law, please? It's, companies can only, if you're publicly traded, report GAAP, because I'm so tired of non-GAAP. You get down into the. This is great. Their effective tax rate, and that's where it makes it non-GAAP, minus 47.5%. Their effective tax rate was minus 47.5%. I mean, that's even more absurd. Last time it was actually minus 23.1. Now they're down to minus 47.5% tax rate. It's all juiced. It's so people looked at it immediately. They're like, "Hey, that's not." Oh, really, guys?
It's ridiculous. Absolutely ridiculous.
Come on, and I'm glad a lot more people are waking up to this, and it's down very large. It's now trading at 145. Before earnings, it was trading about 161. Now it's sold off bigly because this is getting ridiculous. Come on. I understand trying to juice some stuff, but let's not get absurd.
Negative 43.5% tax rate.
Negative 45. What was it? Oh.
Negative 43?
Negative 47.5. Why don't we just round it up to 50? They should have gone for the whole. We're at negative 50% tax rate.
Negative 50% tax credit every year.
Yes. I mean, that's how you beat by saying. Oh, where are we in this earnings cycle? And in the important news segment, this is decided this week. Heinz has announced they had their vote on Twitter. They're bringing mayo chup. They're actually going to bring it to this country. Mayo chup, the mix of ketchup and mayonnaise. Most people call it, especially if you're from Utah or lived in Utah or been to Utah, it's called fry sauce. They took a poll on Twitter, and 55% of the people voted. This has been available overseas, but now 55% of the people voted to bring it to America. So we will start having mayo chup at some time this year.
So what you're saying is, if I add relish to this relish, the green relish, then it becomes a top secret. It becomes a secret sauce, right?
That is correct. It does. It becomes a Big Mac secret sauce.
Why is this in our news? Is it because YouTube's clamping down on channels that talk about news?
Well, I figured, we people, this now gives them a perfect reason to turn it off, because we're talking about mayo ketchup or mayo chup.
Did we ever try the nacho fries? We didn't do that, did we?
No, but we haven't had a food thing in here for a while, and I saw, hey, how can you refuse mayo chup? Because I'm going to have to try that. I do like fry sauce.
I quickly want to throw out there the earnings scorecard so far, with 17% of the companies in the S&P 500 reporting actual results. These are not estimates. 80% have reported a positive EPS surprise, and 72% have reported a positive sales surprise. The blended earnings growth rate so far for the S&P 500 is 18.3%. If 18.3% were to be the actual growth rate for the quarter at the end of the earnings season, it'd be the highest earnings growth rate since the first quarter of 2011, which was 19.5. Now, interesting note, the blended earnings growth rate usually rises through the earnings season because we haven't had a lot of biotech, pharma, tech. We haven't had just the full swath of the companies that tend, when they beat, they tend to beat by a lot, which is, again, biotech, technology, internet sales and software, things like that. So it's probably going to be higher than that. This, to me, indicates a blended earnings growth rate at the end of the season somewhere around 20. So that is a pretty good run. The estimated earnings growth rate prior to this earnings season was 17.1%. 6 sectors have higher growth rates today compared to March 31st due to positive earnings surprises led by financials. And for Q2 2018, 4 S&P 500 companies have issued negative guidance and 7 have issued positive guidance. The balance did not issue guidance at all. So the forward 12-month PE ratio for the S&P 500 right now is 16.6, which is above the 5-year average. Just a little scorecard for you guys.
Thank you for that scorecard. Did you see Netflix's earnings?
I did.
Well, they rallied a big big off the ad 6.2 million. That's the big number. Everybody follows that. The net streaming ads, 6.2 million estimated, 4.83 million. I like their quote. We will continue to forecast free cash flow of -3 to 4 billion in 2018 and free cash flow negative for several more years.
Yeah, they have several $1 billion of off-balance sheet debt. I believe you know what the number is, Mike, right?
Off-balance sheet debt is 17.9 billion. On-balance sheet is 6.5 billion. So they almost have 3 times as much off-sheet debt as they do on.
Yeah, and they're going to have to match that up against something. So you're either talking about a service that has to quintuple their subscriber base while doubling their price, or they just are never going to make any money. And I don't know how long a company like Netflix gets the Amazon treatment, where you can lose money, it's okay, we don't care. I don't know how long that happens. Right now it's happening, obviously. I mean, it's down today, but it got a pretty good bump off of this earnings. Usually it goes up around 10% after its earnings.
Yeah, I don't know how they're ever going to dig, because they have to keep producing new content. Else they're not going to keep getting subscribers, or they're not going to retain their subscribers, and they're burning through so much money to produce the content.
Lately I've been much happier with Netflix because they've had those movies. I like these services for movies that I've seen before, not movies I haven't seen. New releases is fine. But I like them for movies I've seen before that I'm just dying to see again. Usually if I'm going to lay down for a nap, because I like to put on a movie I haven't seen so that if I fall asleep, I don't care because I've seen it already. I haven't missed anything. I know exactly what scene I woke up to, exactly what scene I missed. And for a long time, Netflix and Amazon too didn't have a whole lot of these movies that I enjoyed. Like your Tombstones and your Goodfellas and your Scarface and your Casino.
You napped to Scarface and Casino?
I napped to Scarface and Casino, yes. I do. I fell asleep a couple times to Lincoln, but mostly it's to violent movies that I nap, yeah.
Violent movies just put me to sleep.
They do. It's what I've dreamt about my whole life.
I have another Netflix update. I have heard through some of my contacts that they are receiving DVDs that they've had in their queue going back as far as 2005.
Well, that's good.
And they like that because even though the streaming rights for many movies are off of Netflix, they still have the DVDs of movies they don't have in streaming.
I wonder how, I was going to say, I wonder how many people still do just the DVD service. Didn't they separate them a while ago?
Here's a couple more interesting numbers from Netflix. Net debt divided by EBITDA, 41 times.
Wow.
Yeah. This is another one. This at some point is going to, I don't know how it's going to sustain its stock trajectory, because I was reading, I don't know if it was tongue in cheek, but I saw some things that actually for them to become profitable now, they have to, their subscriber rate would be like half the world. Literally, you're signing up half the world to get out of your debt hole.
Yeah.
So that's interesting. Hey, what happened with Goldman Sachs earnings?
Best equities trading result in 3 years, record profits, beat on EPS, revenues of $10.04 billion versus expectations of about $8.75 billion. And earnings per share, $6.95 versus expectation of $5.58, so $5.58. So they beat by about $1.40 on EPS, which is a big beat. They also raised their dividend, which was expected, but they weren't expected to raise it by 5 cents. They were expected to raise it by 3 cents, so a little bit better on that. Just overall, really good. It's funny, financials didn't respond very well at all to some of the earlier beats. Wells Fargo got their $1 billion fine today. I think that was probably part of it. People were waiting, the Wells Fargo hangover that's coming from that. And the lack of loan growth for these banks, but of course Goldman Sachs doesn't really deal in consumer loans, so it didn't affect them at all. So blowout quarter for Government Sachs.
Did you say Government Sachs?
Sorry, I meant Goldman Sachs. I'm sorry.
Oh, that was just a slip?
That's just a little slip there. It was
all right.
An imitation of a lame-o radio slip. So.
Yeah, okay.
Zoom, bing, bong.
I wish you had sound effects right now. The XLF, the financial ETF, is up again today. It was up yesterday fairly well. It looks like it was up about 1% yesterday. It's up under 0.5%. It's like 28 basis points. So under 0.3%, it's up now. But the previous 4 days it was down. It's down 4 of 6 days, with the last 2 days it being up.
It looks to me like it's just trading this big horizontal channel, sideways channel for the last month. Yeah, I was surprised with some of these bank earnings, and the stocks just are not doing anything. It was already pretty much baked in then. And you can't make this up. We've talked about, Cambridge Analytica and Facebook and everything. So in crypto news this week, Cambridge Analytica is said to have ICO plans.
Oh, come on.
No, that's actually reported by Reuters.
Why not?
Why not? You're all. Let's just ICO it. I saw that go past. I'm like, what? Really, guys? This. I guess if you should just ICO, we still have to have the Bob ICO or the whatever.
That's very secretive.
Yeah. Boy, the cryptocurrency exchange Kraken is ending services in Japan by June.
Ending services in Japan. Is that right?
Yes. No Kraken trading in Japan by June. The New York Attorney General is launching a probe of 13 major crypto exchanges. Here they are: Coinbase, Gemini Trust, Bitflyer, iFinex, Bitstamp, Hayward, Bittrex, Circle Internet Financial Limited, which is Polynex, Binance Limited.
Binance.
Beyonce Limited.
Woo! Wah! Bing!
Elite Way Development, which is tied
crack me up every time.
Gate.io, Gate Technology Incorporated, Inbit Trust Company, and finally Huobi. I don't know. I can't pronounce Huobi. Huobi is so that's what they're doing. They're starting to look.
Wait, what are they doing? What?
Kraken is not on that list.
No.
Oh, good.
So the Office of the Attorney General is asking major virtual currency exchanging platforms to respond to a questionnaire addressing key aspects of their operations, including their fee structure, internal controls, measures they take to safeguard funds and customers' accounts. So that's sort of what they're doing, just trying to prevent abuses.
Also, the EU Parliament passed regulation that states that cryptocurrency exchanges now have to get proof of identification along with some other anti-money laundering specifics before somebody can open an account. So it already takes long enough to open accounts at some of these places, but now they're going to have their identification verified, and again, other money laundering specifics. So that passed in Parliament this week. But I maintain that common sense regulations is bullish for cryptos. I really think that.
Well, Bitcoin, we have it's been rallying, tax season ending, and Bitcoin starting to rise. So we have there's a lot of pressure supposedly on the cryptos for people selling additional coins to pay taxes. And so that's at least the U.S. tax season's over for people who filed on time and did not file extensions. So we've been having a nice little rally in Bitcoin as we're just recording, trading 8,500. Tying back into this was so bad. Another ICO that has been that was done. Crypto founder Yassine Hankir tweeted out. This guy. So he tweets out, thanks, guys, over and out. He's like at the airport things on the beach with a beer holding up. And on the website, it said, and it's gone, that from South Park.
Yeah, that South Park thing.
So people panicked, did he now run off with all the ICO money? And he comes out, and nobody knew. And then a day or two later, he said, no, I was just pretending I stole the 50 million because there's so much scam happening. It was a publicity stunt, but people are literally starting to hunt him down. He put out this really lame YouTube video on it. I'm just trying to point out how risky it is, these ICOs. Well, if you just did an ICO, you raised 50 million and then you tweet out like it's a scam and you're fleeing with the money, that's not a real good way to raise awareness.
Yeah, by the way, that is a real picture on a real beach with a real beer.
Yes.
So he went. I mean, he did leave.
Yeah, you wwite a song or do an impressionistic dance or something as your artistic statement. You don't actually do the thing.
Ping, pow, zing.
Yeah, that's a great way to have nobody trust you ever again, even if you didn't do it. Look, I'm pretending I ran off with your money, but I really didn't. But I could.
I could have, just so you know. I still might.
So...
Wow, what an idiot.
Yeah.
I blame it on Mr. Booze because he's holding a beverage that's alcoholic. It's Mr. Booze's fault.
It's Mr. Booze's that and it's gone. Maybe he was referring to a beer. And
if anybody wants to see something funny, just Google South Park and it's gone and watch the video. It's really funny. That'll scare you from investing in anything.
Yeah. Oh, and now it's. Is there anything else you guys wanted to talk about before I get to my favorite segment, which will just piss off more people with?
Musk.
Elon corner.
No, I'm good.
To our audience listening, make sure you click that bell icon next to subscribe. And if you're on your podcasting device, we're talking to, of course, the YouTubers out there, because YouTube is making it quite difficult to make sure you get awareness. And if there's anything that you can do to support our channel, we're putting it out there right now. Support it, tell your friends, leave a comment, leave a like, all that sort of stuff.
Yeah, and if you're a Tesla fan, you can now tune out for the next couple minutes.
The morning zoo will begin, yes. Start with the morning zoo.
The morning zoo?
That's going to make me laugh for weeks. I'm sorry. This is not a snickering hyena laugh. It's actually funny.
Yeah, we've had a lot of Tesla's really, I think they're sort of like on this path of, it's getting very interesting. They can't stay out of the news anymore. And even fanboys are turning on them to some point. A lot of the more liberal defenders and organizations who've written positive stuff about them are like, what's really now going on with Tesla? What's going on with their production, with their quality? What's going on with Elon's constant tweets? By the way, they shut down their production line again this week. But you had the Elon letter that was leaked, his internal letter, which you knew would be instantly leaked. Hey, Bob, did you read that analysis of the letter?
No, I didn't. No, I didn't read that one yet.
You have to read that. It's hysterical. Okay. It was in the Financial Times. But Elon said they're going to go for a burst rate now of they're shooting for 6,000 a week in June, so they can probably get to 5,000. They're going to overshoot it. You know, he's talking about all this thing. This was hysterical. This is a direct quote from his letter. Most of the design tolerances of the Model 3 are already better than any other car in the world. Soon they will all be better.
No,
this is not enough.
This is the truth. The i3 by BMW, with the tolerances of the gaps in their panels, is the best in the world by a huge margin.
What does that mean with the tolerances of the gaps?
The doors, you take the hood, right, and you'll measure on each side of the hood in 9 places, and these organizations do it for every automobile. Mm-hmm. And they just check to see if the gaps are all even. Okay, and the Model 3 that they did, they were nice when they said it because they didn't want to make anybody disappointed, but they said it's in the lower half of the rating.
Poor Elon.
Well, wasn't he making fun of Toyota like 6 months ago for their production process and everything else? And he had the alien dreadnought, as they called the line. It was the robots producing robots thing, and he came out this week. They have to shut down the line because they have to improve automation by ripping out a lot of the robots, which all the other manufacturers figured out long ago, because you only have robots doing certain things, and then you have humans in there. But he also now tweeted out humans are underrated.
Well, I don't know if this is true or not, but supposedly the line is serial. Okay, when you have a serial production line with no slack, you get one thing wrong in that line, and the whole line goes down, which is different than like when you're doing soda pop cans and filling them. They actually can take a bad can out of the line instantly, and the line will continue, and then they can reroute cans to different directions. So they can adapt the line in that way. It's like it's not quite parallel, but it's not a true serial line. And one of the manufacturing reviews that I heard for Tesla was that their line is truly serial with no slack. And they were doing that all with robots. And that was actually it was quadrupling the time, tripling the time, because once you get an error in one of those welds or joints, the entire line for everybody's got to shut down. They got to rip that out from in front of the robot, move it off to the side, and then rehab it.
Well, Elon's also should be happy because, he's sleeping on the factory floor. So people have put out a GoFundMe account to buy him a better sofa to sleep on.
Can you imagine what he smells like? Oh, God.
This is interesting, too. As Tesla struggles, its rivals make far more with less. So they're estimating, where is this? Oh, Ford is leading the production line. They are churning out 1,100 Ford Escape SUVs every day, more than any other model from a single North American plant. They use 5 workers per vehicle, and everything else is automated. Oh, that's Nissan. They did a Honda in their Alliston, Ontario plant. Almost 1,200 vehicles a day from 4,200 workers, or roughly 3.5 people per car. And they estimated that now he used 10,000 workers last week to punch out 2020 Model 3s. That's 289 vehicles per day, or 35 employees for every Model 3 coming off the line. You got to use people in strategic areas, or you're going to run into problems. But now he's also announced that they're going to go. This is going to be interesting because in order to hit that burst rate of 6,000 and everything, they're going to go 24/7.
Is that an 8s? Is that 3 8s? You got to do some maintenance.
No, that's the problem. He said in order to achieve that, they're going 24/7. Everybody's pointing out you can't run 24/7 because you need maintenance time on your line. And people are like, I don't want the Model 3 car that rolled off at about 2 a.m. Sunday morning. I just don't want that car.
Why are the robots drinking like Elon? Drinking
no, because they're going to throw a bunch of temporary workers at it too. They're going to hire 4. They're bringing on temp workers too. You don't
more cash burn.
Cars with temp workers. Oh, and by the way, this is interesting in his letter. Elon's going to personally all capital or other expenditures above $1 million, or where a set of related expenses may accumulate to $1 million over the next 12 months, should be considered on hold until explicitly approved by me. How big are they? 24-something billion, and he's going to personally has to approve every accrued expense over $1 million?
Well, they haven't been doing that until now. I mean, what kind of madness is over there?
No, but he shouldn't have to be doing that. Well, they burn through all their money. It's just like, now you're trying to conserve cash, and you said you wouldn't have to do a cash raise? What are you talking about, guys? So,
he's lost his mind. Honestly, he's lost his mind. Like, he's obviously an intelligent guy, but if you followed him at all, even prior to Tesla, back in the PayPal days and all that, he's always just been odd. But now it's almost like he's lost it. It's just crazy. Ever since his comment that we might be living in a simulation, stuff has just got weirder and weirder from him.
And finally, to wrap up our Tesla stuff, the reason we're talking about is this is definitely in my going to zero category. But
you got Tesla and going to zero now?
It's been in going to zero eventually. It's going pink sheets. They're going to have to declare. I mean, I think they're going to stop being able to raise money. Their bonds are trading. A lot of their bonds are trading junk status. They're going to. I don't see them generating a lot of cash flow from this Model 3 thing, fiasco. They're never going to be able to produce not in mass quantities, a $35,000 version of that without losing more money. Oh, by the way, the California's Division of Occupational Safety and Health is open to new investigation into Tesla following reports about worker protections of the company plant, and they've been underreporting the injuries and illnesses that have been occurring at the plant. You're legally required within some window, like 8 hours to. It's called Log 300 records. You have to submit it within a certain amount of time after a certain severity of injury, and they have not been doing that to make their plant look better. And one of the things is this article points out that the reveal, and Elon went on an attack on them, calling them they're actually up for a Nobel Prize or something. And this is actually a decent organization doing this reporting, but he went on the attack on Twitter, like calling them an extremist reporting organization, and that they're bought and paid for by unions. The other thing that they noted was the lack of the color yellow used to mark risky areas and other hazards in the factory setting. There's hardly any yellow in the whole plant. It's like red and white. Reveal was told that this was because, quote, Elon does not like the color yellow. So they don't have, like, you're supposed to mark everything off that's hazardous or could cause injury in yellow. Even Nissan they're showing other plants, and they have, like, all the robot arms painted yellow so people can't accidentally run into them. It's a very noticeable color. You look at his assembly line, it's all red.
Wait a minute. So if you're telling me that autopilot, if it's on the road and your Model 3 is an autopilot and you come to a stoplight and it's a yellow light, the car is going to freak out?
No, it's programmed to ignore yellow. Can I bring up some other stuff with colors?
Sure.
Didn't the Fed release a very colorful book this week?
The beige book.
Yeah, the very colorful beige book.
The beige book is very colorful. It's almost the lack of color.
Do they have any other book colors?
They used to. There used to be a Fed green book. There used to be all kinds of stuff.
What happened to all the other books of many colors?
Well, like one of them used to talk about GNP, which we don't do anymore, the gross national product. So they boiled it all down. They decided to dump everything into the beige book. And I think the way they agreed to do that was they took paints and they poured a bunch of colors in and it came out beige. So they just stuck with beige.
If you mix a bunch of colors, you're not going to get beige, probably.
I'm just telling you what the Fed did. I don't know.
Well, what did they say in their beige book?
Tariff concerns and the outlook for the economy is positive. This was one of the least interesting beige book releases I've ever seen. It was basically what we knew. It was very similar to the meeting minutes, where they said everything looks good, inflation's not there yet, but it may pop, and we're worried about trade tariffs. That's it. That's really all you need to know.
So nothing. The only stuff I saw really popping out was outlooks was positive, but there are a lot of tariff concerns.
Yeah. That's it. That's all the whole thing was, really. And they complained about the Model 3 factories. But that was it.
They complained about what?
I'm kidding.
The Model 3?
Yeah, the Tesla Model 3 was 2 pages in the beige book.
We had some other Fed speak this week. Dudley, one of my favorite Fed names.
Mm-hmm.
Dudley just sounds like Dudley Do-Right. Should run our federal. I think they should put him in charge of everything.
It's really calm.
Stock market valuations don't look unreasonable. We're back to a more reasonable level of volatility, but a dramatic drop in stocks would affect the economic climate.
It's interesting how much they comment on stocks lately.
Yes, they're really commenting on stocks a lot. And we have cash and carry. Mm-hmm. We are forgetting the lessons of the 2008 crisis.
Is he referring to subprime lending coming out again?
That's he was referring to a couple things, but yeah, it was targeting subprime lending, which is back in vogue.
Yeah, it's called non-prime now, though.
Yes,
so
we'll see.
They've hidden it. Non-prime.
Instead of USDA prime, it's USDA choice lending.
Yeah, choice lending.
Wait, is that because their laws saying subprime in the laws, so they just changed the other name? They can do it. Is that maybe what it's like?
And they're doing no verification of income again. They literally, you give them a bank statement and they check your deposits, and that's how they verify income. They're not doing full verification as they were. They weren't required to do it in Dodd-Frank, but it was suggested.
Strongly. Kaplan came out. I worry about debt buildup we can't see. Bullard, global economy is in very good shape today. And Quarles, the Fed's Quarles, yield curve flattening is not signaling recession. So that's our Fed song between the beige book, the boring beige book, and we had some minor comments, but they keep focusing on the stock market.
Yeah, so I'm going to go more into the yield curve because that's my why today. But it also is completely contradictory to what's happening in credit spreads. So there's quite a bit to talk about with that, but that'll be my why.
Is there anything internationally that interested you this week?
Mario Draghi has been warning against the tariffs. So I found that interesting because Draghi, again, has been on this sort of, I don't know what you call it, not a crusade. He's not a very verbose guy. He doesn't give a lot of, he's like Greenspan back in the day where he just kind of talks both sides, does not give a lot of hint of what they're going to do, denies everything. But he has been talking quite a bit about trade war and tariffs and the weaker dollar and things like that and what effect that's going to have. And you're seeing it in the euro today because the euro has gotten beaten up pretty bad today, the euro currency. Essentially because he spoke again about how they may need to keep stimulus going longer because of these outside factors. So he's not ready to say that the Eurozone economy is not strong enough to handle interest rate hikes. And that's what this is. I mean, and I'll talk about this in the why as well. But he's not willing to say that. But he is willing to say that, you know, based off of outside factors, we may have to keep stimulus going a little bit longer than the market had originally thought. And again, you're seeing a bit of a hit to the euro currency right now. It's down 0.5%, which is a pretty good move for the euro US dollar on Friday afternoon. Down about 120, where do we got it right now? 122.86. So there were a lot of predictions of it going up to 130 when we hit the high of 125.50 or so. I forget when that high was. It was somewhere around February, like mid-February. And there was talk of us going to 130. But now we're getting that pressure back down. And then the yen is lower as well, which is interesting because the flight to quality or the flight to safety bid that goes into the yen as well as the Swiss franc is basically completely out of the market with the Kim Jong-un talks and with no sort of escalation from the Syria strikes. It's completely out. So the Bank of Japan has done the same thing, saying that essentially, and I'm paraphrasing, the market may be ahead of themselves thinking that we're going to take our stimulus away just yet. Japan has had some decent economic data, but Bank of Japan is still a little worried. That's kind of it. It's mostly a currency story internationally.
Then what's your why?
Today's edition of The What and the Why is brought to you by MotiveWave Software. MotiveWave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. MotiveWave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gannon ratio analysis, but it's presented in a very easy-to-use way. MotiveWave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
The interest rate curve has flattened across the board. Well, not across the board. It's actually unchanged 2s to 10s from April 2nd. It was 48 2s 10s on April 2nd. It was 48 2s 10s yesterday. While the 10-year yield is back up in that 290 range. If you look at a 10-year yield chart, we've almost got a triple top, which is a continuation pattern, which means yields can finally break out higher. So we might be getting a breakout of yields up above 3% in the near future based off the chart. It's not something that we necessarily trade. It's just the probabilities say it's more likely to go in that direction. So yields, while rising, the curve is flattening between the 2-year and the 30-year. 2-year, 30-year yield curve was at 72, and now it's at about 67. So that is the section of the curve that's flattening. And that essentially tells you that the market does not believe that the Fed the market does not believe inflation is there. The Fed has been pretty consistent, except for maybe Bullard and Evans, about saying, yeah, we're still on board for 2 more rate hikes, possibly 3 more for a total of 4 in 2018 if the economy strengthens a little bit. But we're still on track for 3 in 2018, keeping in mind they did one in March. But the yield curve has been flattening, and that's because there is no inflation. And if you look at the comments by the Fed, very few Fed members say, as a matter of fact, I can't think of one quote like this, where they say we need to hike because of inflation. They are all saying we need to normalize policy and the market can handle that, which is a different story. That's a different story than there's inflation. So if there was inflation, you would see the 30-year yield going higher much more quickly. You would see the 10-year yield, 2s to 10s yield curve steepening, not flattening. And that would be a good thing because that would mean just secure, strong economic growth. But clearly the economic growth is still on shaky ground if you believe the long end of the yield curve. Now, credit spreads. So what is credit spreads? Credit spreads is the difference in the yield between high-grade corporate bonds, so something the likes of a McDonald's, and low-grade corporate bonds, something owned by Martin Scarelli. Okay, they're of the same duration, but usually you want a higher yield from a company owned by Martin Scarelli than you would need from a company like McDonald's, because you're more likely to get your money back from McDonald's than you are from a Martin Scarelli. If Tesla issued bonds, they would be closer to junk. Whereas, again, higher grade corporate bonds have a lower yield. Lately, that spread has been very tight, meaning the difference between high grade corporate bond yields and junk corporate bond yields has not been very wide. They've been pretty close to each other. That generally represents a really strong economy and a really, really good stock market with no sign of turning around. Now, the yield curve is saying the opposite. The yield curve is saying we might not have the best economy. We might just have an average economy. And credit spreads are saying the opposite. So one of the two has to give. And what gave over the last couple of days is credit spreads. They started to widen a little bit. So people are now demanding a little bit more yield out of the lower rated junk. So the conclusion to all of that is we might have a weaker economy than people think. And if the credit spreads continue to blow out, it is likely to cause accelerated selling in the equity markets. That's my why.
Very good why.
Thank you, Michael.
Wow. Now, how am I going to top that?
Look at Oracle. I know that's not your what, but what the hell is going on with Oracle?
Look at Apple today.
Yeah, talk about Apple. I don't know if that's your what, but have you looked at the Apple chart? I just glanced at it as we were starting the show.
Well, it's trading right now, very critical level support, 165. Right now it's trading 165.88, but is that right at its 200-day simple moving average and prior major support from a lot of March, support from back in November, and prior resistance at the end of August last year. So if it breaks this level, if we see a close below 165, I'm watching on a daily chart for it to probably return to 155 pretty quickly.
And why the 2 or 3 day sell off now, Stafford, Mike? Either one of you, if you know.
Yeah, where's the Mac Pro? Where's the new Mac Pro? Where are all the good computers? Where's the new Mac Mini? Why are these things? Why is there nothing out there? What are they doing? Who cares about phones? I don't care about phones. No one cares about the phones. That's what's happening.
Do you have an opinion on this?
No.
I don't know. I just know there's a lot of selling in tech today. What's going on with Oracle? You brought up.
Well, just the big. I don't look at Oracle all that often, but the big drop off that we saw. We don't get Apple earnings until May 1st, but I don't know when we get Oracle's, and just a big gap lower, and now we're up toward that R zone. Is this a sell for you yet in Oracle or no?
We broke critical support. Yeah, anything. It's actually above the R zone on the daily. Hold on. I had two. I don't know how I dunked up my chart this much with Oracle, but what a mess. All right, let me go to the weekly chart. It's it just touched prior support becoming resistance at about 47.30 and the top of the weekly, or the bottom of the declining weekly R zone. So yes, it did rally up into a weekly sell pattern on Oracle. Oracle, I mean, first level we're watching for now is 44, and then we'll be watching for a return to the 200-week moving average area, which is about 42.50. By the way, in the S&P, though, we did trigger that sloppy inverse head and shoulders earlier this week.
Mm-hmm.
And we rallied up 3 days. Now we've pulled back to the bottom of the daily R zone. Right now, I mean, nowhere near the stop, but it's pulled back just below the entry level. But that did trigger. That was going to be my what?
There you go.
Bob, can you do a quick crude that I can cut in? Because I really like to have that little crudy segment in each show.
Yeah. So crude oil's had a pretty strong up week based off of a lot of factors. Continued softness in the dollar being one of them. We had consecutive draws from the API, the American Petroleum Institute, as well as the EIA, the Energy Information Administration. So we continue to get these sort of draws at a time when you wouldn't see a draw normally. You would normally see a build at this time of year. But again, the seasonals still point toward lower crude oil for this time of year, so that's not that much different. Having said all that, crude oil is now rallied up to within striking distance in the Brent crude of where OPEC wants it, which has basically been $80. We got up to 74, 75 yesterday. Now, we started off today lower in crude oil. President Trump tweeted out that he's tired of OPEC manipulating oil prices to go higher, and it will not be tolerated. Alexander Novak, the Russian energy minister, actually had a really sort of a clever, funny retort to that. OPEC and Russia met today, Friday, we're recording this on Friday, to discuss the future of their production cuts and what they wanted to do with oil. And it's obvious that the results of those meetings are going to be, we want to keep the production cut in place and possibly extend it because they're finally getting to the prices they wanted. OPEC does not want to release the Saudi Aramco IPO until oil is where they want it to be. And again, in the past, they've talked about $80 on Brent crude, so you would assume that's the price they want it to be. So anyway, Alexander Novak said that he found the tweet from the president a little surprising because essentially what they've done is kept shale relevant, which is not incorrect. Well, it's a pretty interesting view on it because, you know, essentially what they did is they saved shale oil in the U.S. from having these troubles of lower prices, and shale has now gotten a lot better. Shale oil continues to increase in production, but in a very responsible way. In other words, they are producing more per well, and they're spending less, so the costs continue to go down. So that production continues to go up, but demand is up. Venezuela continues to fall off a cliff in production. Geopolitical tensions keep a long bid to the market because a lot of the geopolitical tension is happening in that region, whether it's Syria, which is low level, or whether it's Yemen versus Saudi Arabia, which is higher level. So everything points to higher crude prices going forward, basically across the board. The seasonality play generally ends in June. I think it's going to end earlier because I think with the hedging that shale has been able to do, they're going to be able to ramp up a lot quicker in the coming months than they have in the prior months. So essentially, crude oil trading 68.43 right now. The high is now 69.55. A lot of people would not have guessed that crude oil, WTI crude oil, would be at 70 at this time of the year.
I would not have guessed it.
Right.
And I wouldn't have guessed. We have breaking Fed news. Fed's Brainerd repeats that valuations are, quote, somewhat stretched.
There you go. Let's break.
That's, again, more stock market.
Woo! Yeah, bing, 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 bing.
What was that? Who needs a sound effect machine when you have Stafford?
Right.
And in further Fed breaking news, Cash and Carry, or Kashikari, says Fed is not seeing red lights flashing that crisis is coming. Kashikari's coming out with he's like Mr. Negative Pants.
Right.
He is. He's like, we're forgetting the 08 crisis lesson. We're not seeing the red lights flashing that a crisis is coming.
Must be the non-prime. Guys, I really got to jump. I'm going to do my 2 o'clock Bloomberg and get over to CNN.
All right. And who are you?
Where am I? Oh, I'm Bob Ichino. Thanks again for listening, and we'll have more sound effects and more lame sidekick laughing next week.
Especially more lame jokes from me, Mike Arnold.
Cheers, guys. Thanks for listening.
Bye for now.